The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time. We're about 24 hours away from non-farm payrolls tomorrow. We have some jobs numbers this morning. Getting into it, you got markets picking up right where it left off, basically almost the last trading week. You look at where we were on Friday, almost 300 points above where we are right now on Thursday. You're trading at 39.31. You came into the Fed, Jackson Hole, at about 4,200. S&Ps right now down about 0.2%, trading down 25 points, putting it on a 15-minute. The acceleration was pretty quick last night, even following the closing bell. You trade down to a price point of 39.23 by about 9 p.m. Eastern Time, and you basically chop around at the lows all evening. We're right at those lows yet again, 39.32. NASDAQ 100, we're down about 100 points. That's 0.8% in the red, 12,185. Dow off 162 points, 31,375 in the Russell, off by about 0.8%, 1829. Bitcoin under 20,000, 19,875 for Bitcoin. How about that crude contract, man? 87.12 early this morning. We're trading at 87.58, down $10 in the last 48 hours approximately. You take a look at that crude contract on a daily basis. I have 85.41 on my chart. That's correlating to the high of last October. You look where we are right now. You have a previous high going back to August, middle of the month. We're talking about a low of about 85.88 about. So you're about $2 off that price level right now, sitting at 87.53. Excuse me, gold contract. Talk about an acceleration, man. We got dollar strength today. Currencies controlling a lot of what's happening. Currencies very impacted, obviously, by yields across the world. The Fed on a hiking cycle. Europe, similar action there, but Europe dealing with more woes than the U.S. Dollar strength across the board. Gold trading lower yet again. Pretty remarkable when you look at gold, giving up $200 basically in the last 2 weeks. From 18.20, we're down at 17.10. You make a low earlier of 17.0530. Now gold, I'm talking about it. You put this thing on a weekly. You go back about 5 years to find the low of 11.67 on August 13th, the week of. You trade up to 2,089. And where is the strength in terms of the bottom? You could make the case that the strength is right at around the 382 that we just broke through, that area at about 1740. You could make the case that the lows over the last couple of years, whether it's the low back in March of 2021, we make it to 1673. At the end of that month, we make it to 1677. You get a spike low a year ago to 1677 as well. And then, of course, the previous lows in July, 1678. So 1677, 1678, pretty critical level over the last couple of years. You're within about $30, the price of gold, of that price level. At least, not saying it holds up there, considering where does dollar strength end. We'll jump to some currencies. You have to incorporate currencies, folks, if you're trading commodities in any way. And I'd say if you're trading the markets even, in terms of keeping track of the dollar, the euro, the pound, the yen in particular, if you're trading gold. Gold right now down $15 at 17.10. We got silver off another 29 cents. Now check out silver, right? You talk about a little bit of a divergence here. You have silver trading well below that area of consolidation that it did have at one point. You're talking about well below, okay? I just pulled it up on gold. Let's take a second because this is pretty interesting, right? You take a look at gold. And the lows that I matched up with were basically the beginning of 2021, the middle of 2021, and the recent low in July. Silver, okay, the beginning of 2021, you were at almost $24. September of 2021, you were at $22. And yeah, I guess the July low, you were at $18. You're below that at $17.57. But gold stronger than silver, man, in a big way in terms of that consolidation breaking out silver to the downside. And we jump to notes and bonds. Well, there's a longer-term chart for you. You talk about destruction in fixed income, man. The 10-year, if you were buying at 140, yeah, you just lost, what, 24 points on that in the fixed income over the period of 2 years. We put things on a daily to see the acceleration. And boy, you're talking about trading from 122, and we got a 115 handle, did we? No, 116.005. So we traded right to 116 on the dot earlier this morning, and you're talking about right now a yield 3.25% on the dot. 3.25%, the yield on the 10-year, let alone what's happening on the 2-year, the 30-year, etc. The lows in the 10-year, only about 2 points below where we're trading at right now on that 10-year. You pull up the 3-year weekly, you take a look at the 30-year. Now, boy, I've been talking about it, man, the 30-year. If you want a bear case, folks, the bear case is line it up as far as the chart goes back to basically the year 2000, as Conan O'Brien would say. In the year 2000, you start out at a price of 90. Every time this thing has bounced off that trend line, except when we accelerated through in April, what do? You come back up right to that trend line, literally. You test it and you dive lower, and that's quite a dive, folks. The 30-year from 145 to 133 right now, you're down 2 full points. Amazing moves across the board. Look at that drop-off, man. We got at 8 a.m. this morning from 134.28 down a full point over that time already. All right, let's jump around to some of the news we got this morning. Jobless claims. We'll jump to that number first, 232,000, and that is for the week ended August 27th, decreasing 5,000 to 232,000. The market was looking for about 248, so a little bit less than the market was looking for, indicative of a stronger economy. The one thing I always say when we get these numbers, man, you know, there is a lot of variance when you're dealing with a number of 220, 230, 250,000. That number pretty indicative of a healthy economy. And when you're talking about only 10, 20, 30,000 jobs over the course of a week, yes, to those 10, 20, 30,000 people, that is quite a dramatic ordeal. But many times there can be churn. I'll get it out. Churn in the economy. Now compare that to the fact that, you know, we were supposed to get July employment numbers, and we added 500,000 jobs as opposed to adding 200,000. You get wage data as well. So the real main event tomorrow at 8:30 in the morning. But this morning, we get weekly jobless claims numbers and pretty strong numbers. Continuing claims rising to 1.44 million from 1.41. So that is a rise a bit. That data 1 week delayed. Continuing claims a 1 week delay from the unemployment weekly unemployment claims. All right, what else do we have going on? As I came on the air, if you're a Twitter fanatic, well, you might be able to pay some money for premium services starting. Twitter, so much for a pop. You are going to be able to use the edit button if you're a premium paying subscriber, I guess. And the chart pretty much agrees with my sentiments on that, because I don't think that's a path to riches for a company like Twitter, allowing an edit button for those that want to pay. Yes, you're going to have many people that take advantage of that, but considering the scope of how many people actually care that much about their Twitter landscape to have the edit button, not really the masses, in my opinion. All right, what else we jump around to? Let's jump around to some of the FANG stocks, see how we're going to open up today. Amazon, down to 126. I was checking out Amazon earlier, man. You know, I'm an Amazon bull. But boy, we got quite a pullback going on, and if this market trades lower, you could see Amazon pull right back to where it was, 106 to 113. You accelerated lower on their last earnings one time ago, as in April. You got a pop on their earnings in July. You're sitting at 126. They got as low as 101.43 per market, right? You're talking about $25 of what we're below where we're at. That was May 23rd. That was June 13th. Amazon looks to open down about $1 on the open today. Stay tuned, folks. We're coming back talking to my man Kevin Hincks from TD Ameritrade Network. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P right now. You're negative by 23 points, trading at 39.33. We got the NASDAQ negative by 95, NASDAQ 100. You got the Dow off 156. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market at noon Eastern time right here on Tiger TV. Kevin Hincks, Tom White, the team at TD Ameritrade Network, folks, they break down the day's market action. They walk you through 3 trades usually. You're talking about hypothetical trades. You're talking options. You're talking defined risk in a very volatile market right now. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, this is the quiet before the storm, although it's not too quiet today, frankly, Tommy. I mean, this is one of those situations where, you know, stocks are down, bonds are down, not a lot of places to hide if you're an investor. It seems like you're getting hit from both sides. So the markets are heavy to start the day. You know, more bad news. You know, Tommy, the drip of negative news as it pertains to the chip sector. It just keeps coming. Every day there's a new story. Yet yesterday after the bell, news out on NVIDIA. It's going to open down $7 today on news you can't. The government doesn't want them to sell chips to China and Russia. So more bad news for chips. You've got the 10-year yield now at 3.25. You've got the dollar higher this morning, back over 109. You've got crude oil basically saying that demand destruction is real. This is a market not setting up really great, Tommy, and I don't know, frankly, what will change the narrative in tomorrow's number.
Yeah, you almost beat me to my question. You made a great comment in terms of nowhere to hide right now. We got the 10 years down 26 ticks, the 30 years down, I think, right around 2 full points when I was starting off the program. And you got markets lower as well. I agree. I wake up, man. I look at the futures. I say, here we go again, right? You get a little bit of a bid. There's the sell-off. Here we go again. Kind of a dismal mentality a little bit. Tough to get a bid right now in this market. And you guys do a great job, Kevin. You guys are talking about a lot of trading, really, where you're making trades for whether it's a week, 3 months, 6 months, sometimes longer term durations, but not as much of an investing even from a retirement portfolio. But you made reference to it. And just generally speaking right now, what do you say to maybe some of those people out there looking for maybe value? Is cash even a spot right now that you'd consider and waiting things out? Are you comfortable maybe with getting into some yields when we're pushing levels of 3.25% and up and down the line from there? The 2-year at some pretty lofty levels. There's no simple answer. There's no correct answer. But I think a lot of people are processing that question in their own mind. What goes through your mind when you look at the deterioration with both, like you talked about, notes, bonds, and the market all at once right now?
I think this has a lot to do with your age demographic, Tommy. I think if you're young, you're looking for good quality stocks that have sold off during this period. If you're older, closer to retirement, you should be looking at a 10-year yield above 3.2% as a good place to get safe returns on your money. So I think it based on your demographic, you should be looking at different things in the market right now. Both are getting cheaper by the day, Tommy, but definitely, if you're a young investor, you should be looking at some of these really good companies going through rough times. And if you're older, you basically like fixed income. You like yields going up because that coupon that you're getting, that price, that level of income is going up as these yields go up, Tommy. So I think there's something in this for everybody. It just depends on your age demographic.
Yeah, some great points, man. And fixed income, it is remarkable, man. It looks so attractive. The only worry is it seems like it's going to keep getting more attractive right now, the way the trends are going on the price of some of those fixed income, as we know. But that's the question of the hour, of the day, of the times, I guess. With that in mind, Kevin, we still got some companies coming out. The big event tomorrow, of course, 8:30 in the morning, non-farm payrolls. We don't speak to you tomorrow, unfortunately, but then we come into the long weekend. The next time we're going to talk to you is Tuesday, and I love saying it, man. We're going to know a lot more about this market the next time we speak. Are we waiting for tomorrow morning right now, or what's your take on we got the weekly jobless claims, but you've talked about not really that important of a number, especially considering what we get tomorrow. You think the market just kind of sails into tomorrow morning and waiting for that before the long weekend?
Tommy, the question that investors have to ask themselves is, what in the number one data point of the month that we'll get tomorrow, what can change the narrative that Jerome Powell gave us about a week ago right now, which is, that rates are going to be, he's going to be incredibly hawkish. And remember, at 9 o'clock last Friday, when Jerome Powell started speaking, the S&P was at 4,200. So it's been quite a week for the S&P, Tommy. So I think that is the question is, what can change the narrative out of the Fed? Because they've been very consistent, almost screaming, table pounding for the last week about inflation. And let's face it, Tommy, as I said earlier this week on your show, the administration spent about $1.1 trillion since the last Fed meeting. So their concerns, I think, are legit, and they're going to stay on their job, which is inflation. They haven't wavered. So, excuse me, I think this is going to be interesting. I don't know what number can make the market happy, Tommy.
Yeah, it's a great point, and that is the type of conversations that you want to have with yourselves, folks. What can change things? What could happen? What type of probability scenarios could play out? Are you positioned well for those types of possibilities, and what kind of probabilities are you assigning? And these are all personal decisions as traders you're going to make. But yeah, folks, give me a call later in the program if you know what could come out tomorrow and change the dynamic coming into a long weekend. Very tough to be a big bull buyer. I mean, the only attractive nature is, like you said, we're almost 300 points lower than we were last Friday. With that in mind, Kevin, what are you guys talking about coming up today at 12 o'clock on Fast Market?
We're going to look at two names with earnings after the bell, Broadcom, AVGO, and Lululemon coming out with earnings after the bell today. Like Folio, we'll look at that. And then our third time, we'll look at a solar company, First Solar, that will FSLR. is what we'll look at. So
Nice.
3 good names today for fast market ahead of the jobs number tomorrow.
I think I saw a headline earlier in the week. They're going to be building something new on the heels of some of that package going through. And Lululemon, it seems like, I'm not a big Facebook fan, not a big Zuckerberg fan in general, along with many, but Instagram I actually am a fan of to some degree. And man, I don't know what I've been clicking on, Kevin, but all I see is people pushing some type of, whether it's athleisure, short, comfort, pants, whatever it is, quite a market right now for Lululemon at about $300. But this thing, down from $485. But boy, folks, you back up this chart, you're talking about trading at $57 in 2017, still 6 times that, almost at $300 right now. Well, Kevin, we appreciate the time, the education as always, man. You have a great day. We'll be watching at 12. Have a great long weekend, and I can't wait to talk to you Tuesday, man, and see where we're at.
Have a great weekend, Tommy. Talk to you soon.
Okay, take care, Kevin. Folks, tune in every trading day. You heard it. They're going to be talking about some great stocks coming up at 12 o'clock. And outstanding program, folks. Even if you don't trade options, understanding just the trades they're setting up, understanding how they set them up, the implied volatility, the statistics that you can learn, the display, all of that within the Thinkorswim platform. And folks, Thinkorswim, TD Ameritrade, they are sponsors. They have been for a long time supporting TFNN. I tell my friends I would use Thinkorswim anyway, regardless. It is such an outstanding platform. You can check that out as well. And stay tuned. We'll be right back for the open, folks.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at an S&P 23 points lower, NASDAQ 100. Let's put things on a little bit shorter term time frame. We'll put it on a 15-minute to see the action this morning. NASDAQ 100, you're down about 112 points. That's closing in on 1%. We were lower than 1% overnight. S&P's off 22, the Dow off about 140. We jump over to NVIDIA. Yeah, so NVIDIA down about 6%, 5.2% right now to be exact. The headline, Kevin referenced it, and yeah, it is tough woes all around on the chip sector. I tell you, folks, hindsight 2020. But boy, that was a heck of a short, man, when this thing got parabolic. Look for those parabolic runs, you know? I mean, look at our man Basil Chapman, always talking about symmetry. Yeah, you got a little bit of a spike there. Well, folks, I mean, maybe that's a head and shoulders in some capacity. You could make the case. You could make the case that it's parabolic from the period of May 17th of last year up to November 22nd, where you traded from 140 to 346. And just like that, in a pretty similar time frame, right? How long did it take? You went from the middle of May till the middle of November. So what? You're talking about 6 months. And then what do? You take about 6 months to go all the way back to 150. And this morning, you actually just, what was the low here? Okay, so we're not quite back at the July 4th low for NVIDIA, but you're off 5.6%. The headline, the U.S. government restricting chip sales to China. Seems like that would make sense, right? And Russia, that one obviously makes sense with everything going on. But shouldn't be too surprising that some of the technology that some of our biggest American companies are employing might not be able to ship that to China as they're potentially starting war with Taiwan, etc. Not too surprising. Nonetheless, NVIDIA, they take a hit, down 5.7% as the markets sell off a bit, with S&Ps off about 28. Let's see how Twitter opens. Any action on Twitter as they're going to start charging and allowing people to use the edit button. Twitter, basically flat on the session right now. We jump over to Tesla, see how they're trading, down about 1% right now. Let's see how some of those growth stocks, the fan favorites, Roku. Look at this, man. This thing is in. I mean, the only path right now for an investor in Roku, man, is maybe considering that somebody might want to buy it at some point. Maybe you gain some exposure to them on a Friday or something like that. Taking a little bit of a flyer, etc. You're talking about a company, $9 billion for Roku right now. That's a tough one, man. Reminds me a little bit of DraftKings, two entirely different businesses, but DraftKings, you're down 2% right now. Company about $7 billion for DraftKings. So much. Zoom down 1.6% right now. These equities, man, it is just max pain all across the board. Now, Zoom, a $23 billion company, they do make money. And you're starting to get into the area. And what are they looking at? A PE ratio of 30, maybe? So you're still a little lofty at this. When I think they were growing at 8% last year, 8 to 12%. They're growing their enterprise customers, Zoom. So you still got to be careful, man. Some of these levels just got very, very lofty in a big way. Now, I've been talking about the S&Ps, man. You get to down to 3,900. Maybe this is where the market's comfortable. We didn't think we'd get down there that quick, man, but you're talking about a 618 of the entire run higher from 36.39 up to 43.27. Remarkable. We're at 43.27, man. We came into Fed speak at 4,200. We're a solid almost 300 points. What was our high there? 4,042. No, excuse me, 42.17 was the high. So within about 9 points of 300 points off of where we were just 1 week ago, 39.26. As Kevin mentioned, please, folks, give us a call at 877-927-6648. How does a narrative tomorrow change with the non-farm payrolls number? I don't see it, man. I don't see it at all. I was listening to some great analysis early this morning on Bloomberg, and somebody was talking about saying, you know, bad news versus good news, right? Bad news used to be good news for the market because bad news would mean that the Fed might not be on such a hiking cycle. The Fed would be impacted by bad economic numbers, causing them to hike less aggressively. Okay? That might not be the case anymore. We start getting some bad numbers. That's not going to be necessarily indicative of a Fed that's going to pause their hiking unless those numbers are somehow going to point to a CPI that is going to be lower, or a PCE in the Fed's case, which is going to be dramatically lower. Because the Fed, in terms of jobs numbers tomorrow, I mean, if they're great, that's fantastic. The economy should be able to weather the hikes that are coming, and that is the Fed's point that they're trying to make, right? If they're not great, well, the Fed could say that is one data point. We need many more to illustrate that we have broken the back of inflation. No matter what happens tomorrow, I cannot imagine Chairman Powell toasting on a Friday afternoon for happy hour saying, mission accomplished, we've tamed inflation. There's nothing that could come out almost, in my opinion, tomorrow that would be a deal breaker. We need a couple months here, and if we need a couple months, that means if we get bad economic numbers, any along the way, it's not going to save this market, and it's not going to transform the market to consider that the Fed is going to start cutting. They are on a hiking cycle. I think that's what we're seeing play out, man. Now, we've given up 300 points, okay? We've now given up almost 10% off the highs, okay? 432 points would be a 10% pullback. What are we approaching right now? We're approaching 400 points exactly from the highs. So we're approaching a 10% pullback from the highs of where we were August 16th, man. 2 weeks, the market just pulled back 10%. All right? So, as always, the market gets ahead of itself. Maybe you could argue that at 4,200, it was not fairly priced. At 3,900, it is more fairly priced. 3,900 could be a point. That is the highs we had from late June. It's the highs we had from July. It's also the 618 of the entire run higher from 36.39 to 43.27. We get 27 points down to that price level of about 39.03, and we'll see where we go. Now, the NASDAQ 100, we're already there, right? So don't be surprised when the S&P can do something that the NASDAQ 100 can do. As in, you trade from 11,000 to 13,768. Just like that, the NASDAQ 100 is more than 10% off its highs already because we've almost pulled back to that 618. As in, what are we exactly? Let's see. We're 1,600 about points below, and 113, like 1,400 points would be 10%, and we're 1,600 points already off the high. So the NASDAQ 100 pulling back 11% in 2 weeks. Volatility not going away anytime soon, folks. And let's take a look at the Dow and see where we're at. Now, that's the full pullback in terms of the bounce. Okay, pretty interesting. Where did we bounce to? The 618 of the entire pullback. 36,000 down to 29. We trade up to 34 right at the 618. We turn around. I'm going to take that line off there. We'll line up here. We'll put a little Fibonacci number on here to see what we're dealing with. And the Dow accelerating actually through that line. 31,323 on the Dow. All right, let's jump over to the dollar index as we take a look at this market. There's an acceleration for you, almost up to the highs we had 4 days ago. You put this thing on a 15-minute. You talk about strength, man. Yesterday you finished at 108.66. Right now you're up 64 ticks, 2/3 of a full point, you could say, in the dollar at 109.33. Let's jump over to the euro-US dollar. Back below parity, 99.81, right to the lows of Wednesday. We jump over to the pound dollar. Whoops. Yeah, and that pound, man. Euro and the pound both in trouble. But check out the pound versus the U.S. dollar, man. The pound's in big trouble. As if the euro is in enough trouble, right? And we jump over to the yen as well this morning. Making new highs, not surprising. Gold trading lower. The yen at 139.52, breaking over the highs we had from July 14th. Stay tuned, folks. We'll be right back in 3 minutes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps right now negative by 21 points. You get the NASDAQ 100 negative by 74, Dow off 180. Jumping back to that yen, right? 139.65. Folks, if you head on over to the front page of, not front page, TFNN, head on over to YouTube. You can search TFNN, okay? You'll find our channel over at YouTube. I'll pull it up right now, even as I talk. When you get over there, okay, everything we do, folks, you can subscribe to the channel. It's completely free. You just get notifications. You go over to the videos tab, all right, and you can see all the archives that we have over here. You can check out every interview, every show that we do. I just want to throw that out there to check that out. Jumping back to Twitter. So there's your headline. They launch an edit button for paying subscribers. Seems like they're reaching, man, in terms of this is not a path to a dynamic company of technological amazement, as in $4.99 per month. Man, who's going to pay $50? Only people in a professional atmosphere of some degree, in terms of that are really using it, whether it's, however, influencers, actors, musicians, anybody in the public limelight to some degree, politicians, of course, testing the edit button with a small group of users in hopes of quickly resolving possible issues. It'll probably show up as edited, so I'm not sure that'll be. But, yeah, even amazing they get the headlines they do, when I don't imagine that's going to be something that will change the path of that company one way or the other. Going back to China. So China in the news with NVIDIA. And, yeah, you talk about lockdowns, man. 21.2 million. Chengdu locks down 21.2 million people as China cities battle COVID-19. When does this stop with China, man? I don't know if it does. Zero COVID policy, it is here for the duration, folks. And just for some reference, that's basically the population of the current metro area of New York City, which is about 19 million in 2022. Yeah, pretty remarkable, right? Locking down a city like that. New York City population, 8.8 million or so. So you're talking about the entire metro. New York State population, maybe almost 20 million. So could that be the whole state? Is that the whole state? New York population? Let's find out. Yeah, it sure is. New York City is 8.8. New York State is 19.5. California is 39 million people. So that's locking down half of California or all of New York, for some reference. That blows your mind, man. All residents were ordered to stay largely at home from 6 p.m. on Thursday, allowed to send one person per day to shop for necessities. The government said in a statement, you can't overstate how this is going to continue to impact things across China. And that is for 157 cases is what they're dealing with. Seems like 150 cases are going to be popping up everywhere, man, in perpetuity over in China. So if we can figure out how that's going to impact things, I don't imagine that stopping anytime soon. In the U.S., it's back to work, man. Jeffries, they're telling staff to come back to the office on a consistent basis. Workers can still work from home with no issue. Executives stress the need to maximize fourth quarter results. They got to bring it more consistent. So general, right? As it looks to work through its investment banking backlog in the coming months, no issue when employees need to work from home from time to time, though it wants senior bankers to be coming in to motivate their junior counterparts. It still wouldn't go as far as checking badge swipes in and out of the office. So they're trying to leave it to the employees. And there's been studies done. When you actually give an employee like unlimited vacation or something like that, they almost have the impetus to not take it, right? You incentivize not taking vacation when you give them an unlimited path to a certain degree, because the environment can create a pressure to see who takes the most, who takes the least, whatever it be. We're not going to look at individual names on the turnstiles. As long as COVID continues to be manageable, we need everyone back in our offices on a consistent basis so we can truly maximize our fourth and final quarter and future that is ahead. Listen, that's every executive's right, man. And he could easily be in the correct that in their business, he needs people in the office. There are going to be companies completely justifiable where bosses are going to say, listen, I know that I can run this company the best if I have people personally in the same room as me, in the same office as me. I can look them face to face. We can have the meetings. We can have that creative energy, whatever it is. So that's probably what they're going for. They're trying to leave it open-handed. And maybe that's just enough for some people, that maybe once every couple of weeks you need a day off, right? Maybe you want once, twice a week, you want to be able to cut out halfway through the day and catch a kid's game and then work at night to cover your daily responsibilities. The memo follows similar moves from banks, including Goldman Sachs and Morgan Stanley. Wall Street, once again, to get workers back at their desks in towers across Manhattan. Check it out, though. The average occupancy in New York, 35.3% last week. It's not quite there, folks. New York, Manhattan, it's back, but many people still working from home to some degree indeed. All right, what else we got pulled up here? Let's take a look at some of how the stocks are faring as we kick things off. Amazon opens flat this morning. We got Apple shares. They're down about 0.2%. Quite a little pullback for Apple. Let's see where Apple is in this pullback on a Fibonacci level, because Apple's been overperforming this market on a pretty consistent basis. And we just said that earlier in the program, if you weren't listening, we had the NASDAQ 100, which is at about a 618 of the entire run higher it had. That would put Apple $10 lower. Apple consistently overperforming even the NASDAQ 100. Now the S&P, okay, we're approaching the 618 even. So Apple dramatically performing even the S&P in terms of where we've been and the pullbacks we have. The S&P gives up almost 618 of the entire run higher, versus Apple almost pushes all-time highs yet again, and all we do is we've backed off below the 3.382 at this point, though, for Apple at 157. We jump over to Google shares. Yeah, I mean, look at the divergence. No wonder the indices are down more. Google never even got a bid. Now, Google's in a different business, man. Advertising, they're going to face some big woes, much different than a company like Apple may be in terms of what they rely on for revenue. Google shares today up a bit, but boy, you talk about flirting with basically near lows recently. We jump over to Microsoft shares, down 1%, 258. Look at Microsoft. They almost give it all back as well. See how Netflix is trading right now. They never even got a bounce practically as Netflix. Up about 0.25% as the market just sitting. Negative about 27 points. Not sure you're going to be a buyer coming into tomorrow's number, folks. The only thing would be maybe you get a dead cat bounce to some degree in terms of, you're almost 300 points below where we were last Friday. So you can make an argument you look for a bounce there. But boy, coming into a long weekend, you got some tough news out of NVIDIA. That's going to hit them to the tune of hundreds of millions of dollars, man. No more doing business. And look at NVIDIA, continuing to sell off. You're off 7.4%. You got a 139 handle for NVIDIA. We put this thing on a 5-year weekly. And where are you back to? You're back to the middle of 2020. You did accelerate from the COVID lows of 45. You based it about 132 to 140, and you're kind of trading right back into that area, now below where you were on July 4th. This market trades lower, though. It's nothing stopping NVIDIA going back to $75, man. Yeah, because you prayed through this area that you were in terms of the highs of August of 2020. There's nothing stopping NVIDIA going back to about $75 from 140. That would be a wake up for this market, man. All right, folks, stay tuned. We got one more segment. We get the S&Ps down 28 points. You got crude off $2.21. You got gold down about $18. We'll take a look at gold as well, coming down to that 1,700 price point. Stay tuned, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps just bumping around this bottom level of about 3930, and the S&Ps down 28 points. That's 0.7% in the red. You get the NASDAQ 100 a little bit lower. You're off 111 points, or about 0.9% in the red. Dow only off about 0.5%. The Russell 1.6%. Man, whew, talk about some pain. Back the Russell up. Yeah, it doesn't go back even nearly as close when you're talking about the futures, but the Russell basically almost trading at September of 2018 prices. September of 2018 prices. Where's the S&P at that price level? About 2,900, so we're about 1,000 points above that. So S&P's up about 30% over that time. The Russell's flat. Okay, let's jump over to the gold contract. As I said, gold trading at 1710. We back things up. In the year 2000, gold at about $250. You trade up to 1800. You pull back. You break through that high during COVID to 2089. Now, just to put some context in terms of this consolidation we've been getting, that's on a monthly. You put this back on a 5-year weekly. You zoom in on the action. And yeah, doesn't mean it's going to hold, but at least you're coming into an area basically right where you were prior to COVID, March 9th. That's where the bar accelerated lower, right where we're sitting right now. You had a high of 1704. We're trading at 1709. You dove down with every asset class to 1450. Gold charged higher to 2089, and we've basically been in a 2-year consolidation between about 1700 and 2000. You're near the lower portion of that, and a lot of it's going to matter, folks, when you talk about the dollar yen, the euro, currencies, yields, of course. The yen keeps going higher, as in weakness in the yen, dollar strength is what that is. That's going to be a tough one for gold no matter what. But the only thing I want to mention is, you just went from 115 to 140 in the yen. At some point, folks, the markets will get ahead and we'll catch up. You get the dollar index pushing almost 210 as we wrap up the program. 109.36, just off the highs of 109.47. Thanks so much for starting your trading day with me, folks. Stay tuned. We got our man Basil Chapman coming up next. We got our man Steve Rhodes with the Trader's Edge at 11. We have Fast Market at 12. You heard it. They'll be talking about some good stocks. Lululemon, one of them, coming up at 12. We got Dave White out on vacation one final day. We got Larry live at 1 o'clock. My dad, Tom, live at 3. Stay tuned, folks.